Folks, one of the things that I think is not being discussed or talked about enough is just how, I don't know, frozen, closed the regional banks are to new business. They were the avenue for lots of construction companies, lots of real estate investors, lots of multifamily. They were the answer because the big banks kind of ignore them. But that business is shut off for a while. So we're going to talk to the one and only Stephen Dow from Velocity Mortgage. We're going to ask him about what he is seeing and what's going on. But before we do, we've got to do this little marketing spiel so we both don't get in trouble.
Thank you again for remembering. Although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel are that of my own. So let's get it going.
Yeah. So what, you and I know this, but you've been in the game quite a while. You've been through several different cycles. Even you were not around in the 80s, right? You were around, but you weren't
I
doing
was, but I
mortgage.
was like chasing after the ice cream truck and riding
Yeah.
my Huffy and getting scabs on my knees and
It's stuff like that.
making
You
making dirt pie. Yeah.
yeah. I remember those times when you played outside instead of on your phone inside. Yeah, you get
Right.
you
Yeah.
get
This is
scars.
decades before Fortnite, decades
Yeah,
before Nintendo anything. So yeah,
yeah. Well, the
good old
reason I
days.
bring that up is I think we're experiencing something to akin to the S&L crisis. And what I really see going on is there's a certain segment of the finance market. In the 80s, it was savings and loan. Today, it's small regional banks. And they're in a lot of trouble, right? Back in the S&L crisis, they had capital flight. You're seeing capital flight. They made loans on assets that values fell, right? And then they had to stop lending. And ultimately, you saw a lot of consolidation and bank failures. I suspect what we're going through the next 3 to 4 years is consolidation. You're seeing a lot of banks conserve cash. And really, where this comes to the question for you is if that part of the segment of the market is closed for new business, where do people go?
Uncle Steve.
Uncle Steve. We
I use that a lot as part of my pitch, and people laugh because they remember that because I always say, hey, when all else fails, come talk to Uncle Steve because I don't care about a lot of the stuff that everybody else cares about. So I'm definitely seeing, a good amount of business as far as the fallout from those regional banks not being able to lend or provide that type of financing, anymore. So I definitely have seen, an uptick in interest inquiries, but where rates have kind of trickled. And here's the funny part. We didn't really move when rates have kind of climbed up. I think everybody else kind of caught up to us where I think we're a little early to the party. That's where I know upper management is run very well because they tend to be a
right,
little ahead of the curve and they're
right.
okay with that. They can be a little conservative. I'll lose a couple of deals to, somebody over here trying to gobble up market share to be the lowest rate. But when the winds change and they
Yeah,
change quickly, we're not going to be one holding the bags. They
right.
are. So we're pretty strong. And to go back on some of your previous videos from I think either yesterday or day before, our stool is super strong.
Right.
Um, we pretty much got termite spray and sprayed all the wood. So I think we're pretty strong. I mean, obviously, there's going to be some pain just due to certain things out of our control. The economy,
Right.
jobs, unemployment, stuff like that could impact, rents and such. But other than that, our bottom line's pretty strong, man. We're positioned really uh, um, quite stable for this round that's coming
Yeah.
up. So like you were saying before, a lot of the larger banks are going to be gobbling some of the smaller banks. I was
Mhm.
going to think about maybe in the lending standpoint, but usually from lenders, they just go away. Or
Yeah,
we
they
just
just
buy their
disappear.
paper, pennies on the
Yeah.
dollar or something like that, which happens a
Yeah.
lot.
Yeah. Yeah, I think
So
I think I think where velocity is really going to stand out, and it's again, you're not a traditional kind of lender. You're publicly traded. That's your
mhm.
access direct to Wall Street, all of that, and you're a make sense lender, right? You have, in my knowledge, maybe it's not true, but since I've known of Velocity Mortgage, which is going on 3 or 4 years now, you've always been a make sense lender. It's not like, hey, we take, Fannie and Freddie rules and we add our overlays and blah, blah, blah. You're like, no,
No,
we look at the borrower, we look at the asset, we look at the DSC. I mean, it's just very
big
different.
picture, you know what I mean? Like risk to reward kind of thing where you might be deficient in one area, but if you're strong in the other areas that make more of an impact in the overall ability to pay us back or willingness to, I guess, in a sense. So what I'm speaking to is basically compensating factors. Cash is king. When you got reserves in the bank, even though you might be lacking in one area, it doesn't matter because usually if something happens, you got enough money to pay for somebody to take care of it or whatnot. So
Yeah.
that
Yeah.
plus experience, track record, things of that nature, quality of the property. So all that is kind of considered when making a decision when something doesn't quite fit the box all the way. So yes, I love the fact that we're very flexible. We can accommodate in a lot of areas that other lenders can't. So it makes
Yeah.
it a higher turnover ratio for sure.
Yeah. So if somebody was having difficulty getting a regional bank to say yes, or they're getting run through the ringer with no possibility of getting done, how
Right.
would they reach out to you just to say, hey, can you help me? Because again, like makes sense. You can't help everybody. Like you don't do
No.
construction loans, right?
Right.
For example. But if
Right.
somebody want to reach out and say, hey, this is my deal, can you help?
Mhm.
How would they do that?
Perfect. Email is always the best because if there's something that I can't answer, at that time, I can usually escalate it to a different department. So email is always best. Email address is sdao@velocitymortgage.com. In the subject line, please put the acronym ORAAT to make it past the firewall. Body of the email may be brief description, what you're looking for. Property address would be very helpful. Mid FICO score, best phone number to reach you at, and typically 24, 48 hours, I'll be in touch.
Thank you, buddy. I appreciate you.